CVS Health Q2 2025 earnings beat expectations. Retail pharmacy insurance outlook update. CVS Health has made headlines recently, with its stock experiencing a notable surge following the announcement of its second quarter earnings, which exceeded expectations. This positive news is largely attributed to the robust performance of its retail pharmacy division and some signs of recovery within its insurance sector. On Thursday, shares of CVS, a prominent player in the retail pharmacy market, saw an impressive increase of over 6% during morning trading. The company has now revised its forecast for fiscal year 2025, projecting adjusted earnings to fall between $6.30 and $6.40 per share, a significant rise from the earlier estimate of $6 to $6.20 per share. However, it is worth noting that CVS has also lowered its guidance for GAAP earnings, although specific details regarding this change were not provided. In a recent interview, CVS CEO David Joyner emphasized that the company's strong quarterly performance and the upward revision of its profit outlook are partly due to the ongoing efforts at Aetna, CVS's insurance arm. Joyner described this as a multi-year recovery effort aimed at addressing the rising medical costs that have been affecting the insurance industry, particularly in privately managed Medicare plans. Joyner further highlighted the success of CVS's retail pharmacy operations, stating that they are performing really well. He attributed this success to the implementation of new technologies designed to enhance pharmacy operations and improve efficiency. Additionally, he mentioned the company's investments in workforce and a new pricing model for prescription drugs, which have proven beneficial for payers and have helped CVS stand out in a competitive market. However, it is important to note that the gains in the retail pharmacy and insurance sectors were somewhat tempered by a decline in the health services segment. These results mark the conclusion of Joyner's third full quarter as CEO of CVS, a position he assumed in mid-October after succeeding Karen Lynch. His leadership comes at a time when CVS is striving to boost profitability and enhance its stock performance. Here's a comparison of CVS's second quarter results against Wall Street's expectations based on a survey conducted by LSEG. Earnings per share. Adjusted earnings were reported at $1.81, surpassing the anticipated $1.46 per share. Revenue. The company generated $98.92 billion, exceeding the expected $94.50 billion. CVS reported a net income of $1.02 billion, translating to 80 cents per share for the second quarter. This figure is a decrease compared to the previous year, where net income stood at $1.77 billion, or $1.41 per share. When excluding certain items such as amortization of intangible assets, restructuring costs, and capital losses, the adjusted earnings for the quarter were $1.81 per share. The company's sales for the first quarter reached $98.92 billion, reflecting an 8.4% increase from the same period last year, driven by growth across all three business segments. As part of a comprehensive turnaround strategy, CVS is targeting $2 billion in cost reductions over the next several years. Joyner mentioned that the company still plans to close additional locations to meet this goal, while also focusing on expanding its presence in key geographic areas, such as the Pacific Northwest, where it currently has a limited footprint. Despite the positive performance across its business segments, CVS's insurance unit continues to face challenges. Aetna and other insurers have been dealing with unexpectedly high medical costs over the past year, particularly as more Medicare Advantage patients return to hospitals for procedures that were postponed during the pandemic. The medical benefit ratio for the insurance unit, which measures total medical expenses relative to premiums collected, rose to 89.9%, up from 89.6% a year prior. A lower ratio typically indicates better profitability, as it suggests that a company is collecting more in premiums than it is paying out in benefits. The increase in this ratio was attributed to a $471 million charge related to a premium deficiency reserve, which anticipates potential losses in the 2025 coverage year. This reserve represents a liability that insurers may need to cover if future premiums fall short of meeting expected claims and expenses. Interestingly, the second quarter ratio was lower than the 90.6% that analysts had predicted, according to estimates from StreetAccount. During the quarter, the insurance segment generated $36.26 billion in revenue, marking an increase of over 11% compared to the second quarter of 2024. Analysts had expected this unit to bring in $34.59 billion for the period. CVS's Pharmacy and Consumer Wellness Division reported sales of $33.58 billion for the second quarter, reflecting a growth of more than 12% from the same time last year. This increase was driven by higher volumes in both the pharmacy and front store sales, although it was somewhat offset by pressures related to pharmacy reimbursements. Analysts had anticipated sales of $31.98 billion for this quarter. This division operates over 9,000 retail pharmacies, providing a range of services including prescription dispensing, vaccinations, and diagnostic testing. Lastly, CVS's Health Services segment achieved $46.45 billion in revenue for the quarter, which is over 10% higher than the same quarter in 2024. Analysts had expected this unit to report $43.37 billion in sales for the period. This segment includes Caremark, one of the largest pharmacy benefit managers in the country, which negotiates drug discounts with manufacturers on behalf of insurance plans and manages formularies that determine which medications are covered by insurance.